Hello, my name is Casey Baker, and in case you don't know, I am your instructor, and I don't usually record online lectures or Zoom presentations because, to be honest with you, I swear too much. But as my in-person classes are moved online as well, I thought it would be helpful for us to have a conversation and talk about some of the things that are happening. And from time to time, I'm going to record some video lectures and put them on here for you guys. I'll keep them pretty short, 15-20 minutes tops, and that's about it. Sometimes it might even include some actual discussion board questions as part of the lecture, so that you have to watch these to get the most out of the lecture and answer discussion boards. But not for this week. So as you're probably aware, things are happening. We're going to be off for another week or so, and all in-person classes at AV Tech are pretty much moved online. So you're with everybody else. I am still in the process of revising some of the material, but that's going to be okay. We'll get it all squared away. What I want to talk to you guys is what's happening right now. We're having a crazy, crazy time in politics. Now, normally I would say, hey, the markets are just like, it is what it is. I used to be a futures trader. I don't really like bringing it up very much. This is about the markets because this is not an economics course. But as politics is changing right now, I often joke in my in-person sections that we don't ever pass policy. There's no such thing as laws that get passed. Well, in the last few days, the world as we know it has changed. 10 days ago, we thought socialism was literally the devil and we would never pass any of that. Today, 10 days later, we're getting government bailouts. We're getting about $700 billion. It's probably going to be closer to at least $1 trillion, if not more, where every adult over the age of 18 or 18 or older is going to get some amount of money in form of a check or a refund or a dividend, as Yang called it in the primary, of a freedom dividend, I believe, or sort of Bernie Sanders ideas. But this is coming as bipartisan support. We put down the spears and the knives to attack each other, the Republicans and Democrats, and we have passed legislation. Oh my God, this never happens. This is what we call a focusing event, where the nation comes together in a great need. And Donald Trump has abandoned party lines and is just giving mass entitlement programs. So what are we getting? Well, first, we are getting about somewhere with $400 billion sent to Americans. Don't quote me, but I think you have to be under 95,000 to get really anything. It's going to be targeting people, working class individuals who have lost their job. We are getting unemployment insurance for COVID-19, the coronavirus. We are getting suspensions on foreclosures and evictions as part of this. We are getting the other half of the money is going to corporations as well. In corporations, they're not just getting a straight amount of money being given to them. It's going to be something along the lines of sort of loans that they can take, and they'll have to repay it. They'll have to have some collateral. They'll have to put something down. But it'll be a way to sort of ease some of the problems that we're seeing in America. Now, I talk about my in-person classes, even a little bit on my online courses, that America is really controlled by corporations. And they have their own influence that they can exert on politics, and whatever they want gets done. And they have been panicking. Like even Amazon, as an example, look what's going on. They're canceling shipments to their warehouses, focusing on essential goods. Restaurants are closing. Grocery stores are running out of vegetables and meat and toilet paper. My God, never hear the end of that one. So we have to respond. And Donald Trump has put himself very against the Republican policy of pushing for entitlement programs, social welfare. We're getting sort of food stamps. We're also enacting wartime powers of when a nation's at war. Now, we're not at war, but we're enacting the same policies. Donald Trump is going to be forcing some corporations to make goods that we need, such as face masks, respirators, iron lungs, basic medical supplies, food, toilet paper, these basic necessities. So we're seeing some real stops being pulled out. Now, not all of it. We still have a lot of things that the Army Corps of Engineers can chip in, any sort of government doctor programs. There's a lot of things that can be done, but we're still early in on the process. But what I want to talk about here is what's happening in the markets, because this is really important. Okay, so in the markets, we are seeing some real impacts. So I'm going to pull up the stock market here. Okay. Here we have the Dow Jones. You can use the S&P, NASDAQ. I like Dow. It has a whole bunch of companies. It's just easy. They all look approximately the same. Okay, they all move up and down in approximately the same way. So this is 6 months. Big drop off. You'll see even in the last month, we were almost at 30,000. We're up just a touch today, but we've dropped almost 10,000 points. A little bit later in the semester, I'm going to make you watch The Big Short, and you'll see, let's zoom out to max here, what we had here in 2008. So in 2008 crisis, we dropped all the way down to the low of about 660. Since then, we've had one of the largest run-ups in history. We hit almost up to 30,000, and then obviously we tank in just the last month. So we're having some major impacts, and it's happening very quickly. People are panicking. People are losing vast amounts of money. Well, what's occurring? The Fed is trying to do some stuff. So the Fed is engaging in what we are calling trying to save the economy. They're panicking. So what does the Federal Reserve do? Well, the Federal Reserve controls overnight lending rates. Now, I don't want to get too far in economics, but essentially what overnight lending rates is if there's a run on the bank. So if you go, oh my God, everything's going to shit, I need to get my money out of the bank. So you can go down to your bank and say, I want to take all my money out. And they are required to be able to provide enough money. Well, if everybody runs on the bank like we had in the 1929, where everyone panicked, this became a real problem. And when this occurred, there wasn't enough money to go around. And also there was the Great Dust Bowl, which meant there was no food. We couldn't get bread. We had hyperinflation. We had panic. We actually got most of the social welfare programs that we know today, Social Security, the unemployment insurance, food stamps, so the basic standards of what we would see for later for the establishment of sort of a insurance for healthcare, and then Medicare, Medicaid later on. But one of the things that happened after the Great Recession was the Glass-Steagall Act passed, and that was essentially the United States government gave up control over the U.S. dollar and printing of it and gave it to the private banks, the Federal Reserve. We also removed the gold standard. But what the Federal Reserve, and if you go to your local bank, you'll see in the bottom it says FDIC in the bottom corner, and then it says protects up to 100,000. That's the Federal Reserve. That's what was created. They were designing this whole process so that banks would ensure that there was enough money on hand that if there's a run on the banks, everyone's going to get their money. Now, we don't really care about that as much because what's money? That's, stuff COVID-19's on, right? You don't want to touch that. We have digital economies. We have credit cards. We have PayPal. We have bank accounts. So things have changed a little bit, but they still control this overnight lending rate. So what is overnight lending rate? Gone around the bush here. Two banks. They have to have enough money on hand. So they say, I will lend you money from bank A to bank B at 5%, let's say, for overnight lending rate. So they will transfer enough money. So if there's brings money into the vault so that if there's a run, there'll be enough. Now, the joke is there's never actually enough money on hand. So if there's a run on the banks, we're all kind of screwed. But the important part of this is the Federal Reserve sets the lending rate. So if there's not enough lending going on, people don't want to do it as much, banks don't want to do it as much, they can set the lending rates at maybe 4% or 3%, enough to actually make that happen. Now, the fact that they control this overnight lending rate is irrelevant, okay? What is important is the fact that it sets the tone for the economy, okay? So let's look at the chart here. We have back in the day in 1981, right? We had a height of almost 20% interest rate. So that means if you put money into specifically bonds, right? Such as the 5-month, 10 months, essentially, or 1 year, 2 year, 5 year, 10, etc., 30-year bonds, you would be guaranteed every year like 18% on your money. That's insane. But that was because there was a lot of instability in the market. People didn't have a lot of faith in the U.S. economy. And since then, obviously, we've dropped it. So let's look at 2008. 2008, we had a 5.5% or so interest rate, and it drops to 0 for essentially 8 years, okay? During this process, what this means is this was there to boost the economy, try to stimulate more growth, keep it so the banks would be able to lend more money to people at a very low cost, very low rate. But the problem was they weren't lending anything, right? They were like, you couldn't get a home loan during this time. It didn't matter if your credit score was 830, they wouldn't give you a home loan. It was too much risk, right? After the housing collapse. And you're going to learn more about this as we talk about it in The Big Short. But I wanted to at least give you a little bit of heads up before we get there. In the height of just a few months ago, right? We were last year about 2.5%, and now we're down to almost 1%. We've set it back down to 0. So you might ask, what happens when we go below 0? Well, that's bad. Because let's say you go to a bank and you're like, I have $100, and you're like, okay, how much money? How much interest will I get? And they go, you're going to pay us money to take it. That's what happens when it goes below 0. That's why it almost never does, because it makes no sense for people to put money into the bank at that point. But more importantly, when it's at 1%, think about it. The government raises money to pay all our national debt by issuing bonds, which are essentially like we give the government money for a long enough period of time, and in 30 years they will pay us back with all that interest accrued annually. And why would you put your money into a 30-year bond if you're getting 1.1%? That if you put $100,000 in for 30 years, you can't touch that $100,000, and you're getting what, $1,000 a year? It's nothing, right? You can't live off of that. That's dead assets. Inflation will catch up. So the Federal Reserve has lowered interest rates to almost 0, near 0, and they've done something else. Now, this will be the last really difficult term I give you, but it's called, hang with me, quantitative easing. Quantitative easing, hold on, that's fine. Didn't even spell it right. There we go. Quantitative easing. Quantitative easing is a fancy term that the Federal Reserve hopes you don't understand. What it is essentially them printing money. And when they print money, things get a little weird. So let's pull up a calculator. Let's say you have, the federal government has $1 trillion on hand. Now, that's not actually the case, but let's say they have $1 trillion. Quantitative easing is essentially them going into their account, deleting that, and saying we now have five point it's actually 5.4 trillion dollars. Just like that, that's now how much our bank account is having. What? They just did it. Okay, so we are giving a government handout of about 700 billion, probably about $1 trillion. The Federal Reserve has said this is their 5th round of doing this, over a large round of quantitative easing in many years. 2008, they did 4.5 trillion they added to the economy. We're expected to do it again, but they've added 700 billion as an initial start. Okay, so of the 700 billion, what are they planning to do with it? Well, back to the conversation of this quantitative easing. As you'll see here right from Wikipedia, they're allowed to buy bonds or issue government bonds with the central bank to kind of prop up the bond market. But more importantly, what they can do is they can take this money and give it right to the economy. They can buy corporate bonds. So if a company needs to raise revenue, they can't go to a bank. Banks are like, no, thank you. We want nothing of that. The federal government can provide money. So they direct it directly into the economy. They can literally do whatever they want with it, honestly. So this is a way to boost the economy up. Now there is a problem, though. You don't just get to add this money. It doesn't just grow on trees without an impact. It creates this thing called inflation. As inflation happens, we see large sections of the economy, their goods and services cost more. So as an example, back in the 60s, you could buy a car for a couple $1,000. Now, what does it cost? 22, 23,000? Lots of inflation happens. It devalues the currency. So as there's more dollars chasing the same amount of goods, the price of goods goes up because the dollar is worth less. When the government pulls back money and brings it back in and deletes it from the economy, it causes the US dollar to strengthen so that your dollar becomes worth more. So as an example, how would you like to see, even if we weren't in kind of a time of great panic, right? And with a shortage, let's say it was a normal day. How would you like to do, you go down to your grocery store, right? And you want to buy some milk, right? Milk is $5 a gallon. How would you like to see that milk is now $6 a gallon, $7, $8 a gallon? In 2015, Barack Obama issued some really, really restrictive embargoes against Russia with oil. Overnight, their economy collapsed. They started issuing more money. Hyperinflation occurred. People panicked. They tried to buy cars. So if you were to buy a $12,000 car, the next day it would be 17,000 ruble. So back in olden times, like World War II, World War I, you would see certain economies, they were about as good as wallpaper. So the Russian currency, they just use it as burning material for fires and wallpaper their house because it was worth nothing. You would have to bring, we've even seen this, you have to sometimes bring a wheelbarrow full of money to buy bread during the Great Recession. You know, these horrible events. And this is what the government's doing. They're issuing money. So although we're really excited to get all this free money, right? We're, hey, socialism, right? Yeah, everything's great. Capitalism sucks. Everybody says 1 week of nobody going out and look what happened. Well, it does have impacts. It does come from somewhere. And the way it comes from is the United States government is wanting more money. The Federal Reserve says, here you go. Here's all this money. But there's going to be an impact. The problem with quantitative easing is it's designed to kind of boost the economy, but we have seen 4 times where it really hasn't worked very well. It doesn't really show much growth because the money that they're giving, again, doesn't add up to that much. But you also have to understand we're having a national debt. Look at this. $23.5 trillion. Oh my God, right? This is only going to get worse. We didn't just suddenly come into a lot of money in the United States. We've been trying to issue all these bonds and try to get people to pay the United States government to cover our debts, but we're going to have a lot of debt coming up, and there's a lot of issues with the housing market. Going to probably be in free fall pretty soon. The United States government holds the bag on a lot of that, unlike in 2008. So we're expected to see quite a bit of these sort of problems. If you're ever interested, the U.S. debt clock, it's not 100% accurate, obviously. It's trying to do it real time, but it gives you a really good perspective of some of the major issues going on in the United States. You can see our trade deficit. Median household income's $33,000. God, that's terrifying, right? Bankruptcies, foreclosures. Look at all these bankruptcies and foreclosures. People living in poverty, right? 36.3 million people living in poverty. And we're telling everybody in the United States are about to lose their job, or, businesses are going to go under. It's a scary time. I really understand that this is going to trouble a lot of people, even down to the fact that you may not get internet. Some companies are doing a good job. Not everybody's going to. There's going to be a lot of shakeouts, and I wish you all the best of luck. We're all in this together. Help your friends, help your neighbors, stay healthy. Don't spread the virus, this pandemic. But when possible, if you have a little extra money, donate. Not everything's going to be able to be open. Try to support local businesses. Try to support any business, right? Nonprofits are going to need money. People are going to be hungry. Zoos are going to need food for their animals. The only good thing, and I'm going to leave you on a positive note, I really want to try to do that, is we have been kicking climate change's ass in the last 2 weeks. My research is in alternative energy technologies and specifically climate change. Man, we have done an outstanding job. In Venice, let me see if I can pull this up for you. Sort of a feel-good story here. The water is so clear in Venice because there's no boats. No one's going outside. We're seeing, look at this. Oh God, we're going to Twitter. I guess we're not going to Twitter. We're seeing dolphins, and we're seeing over China where there would be smog. We're no longer seeing this type of smog. In America, there's less cars driving around, so we're seeing less air pollution. Things are actually getting better. All it took was not doing anything. And, the conversation up to this point has been, if the humans don't have an impact. Well, it's clear that we're having an impact. We're going to talk more about climate change towards the end of the course, but stay well, support your friends, support your family in this time of need. Don't buy non-essential goods, help elderly. I'm going to try to keep these videos about 15, 20 minutes so they're consumable. In the future, I'm going to probably have some discussion board posts associated with these videos. So you have to tune into the videos to catch a discussion board question, but not this week since we're off. I just want to give you sort of a little update. Guys, you have a great one. Take it easy. Godspeed.